Black Earth offers a full suite of humic solutions, from high-purity granules to powder, liquid, and soluble formulations, all powered by pure humulite. Trusted by growers worldwide from one of the world's rarest humulite reserves. Grow stronger with the power of Black Earth humulite. Learn more from Mind to Market by visiting blackearth.com.
I'm Shaun Haney, and this is RealAg on the Weekend. Let's get real and get connected with the week that was in Canadian agriculture. RealAg on the Weekend starts now. Welcome to RealAg on the Weekend. I'm your host, Shaun Haney of RealAgriculture.com. Thanks so much for joining us here today for the program. We've got lots to cover today. We're going to hear from JP Gervais of Farm Credit Canada. He's their chief economist. Going to talk about some of the opportunities for trade diversification away from the United States when it comes to the food and beverage sector in Canada. We're going to do a product spotlight with Mark Alberts, who is with InVigor Hybrid Seed Canola. We're going to hear about some of their new hybrids they have on the market. And we've also got Brian Voth from IntelliFARM to talk about what's going on in canola relative to China and how that's impacting potential 2026 acre decisions on the horizon for a lot of Western Canadian farmers. Now, if you have any feedback on today's program, you can send me an email, shaney@realagriculture.com. You can also call the RealAg feedback line, 855-776-6147. Here's a bit of a secret. If you text that number, it's also a text line, 855-776-6147. Let's get started with the show. Let's talk to Brian Voth of IntelliFARM about the markets. I got a question from an audience member. Very simple. We're talking about canola and China and all the things that are going on. This audience member asked, should I plant canola in 2026? What do you say, Brian Voth?
I thought you said it was simple. And as soon as you say China and whatnot, that's why I kind of laugh about that, because that is just how up in the air this is right now. And if China doesn't come back to the table, we're going to have a lot of canola sitting around. We can't replace that demand on its own through anywhere else. Same time, they can't buy canola in the same volumes that they would like to from anywhere else either. So, it just feels like who's going to blink first on this whole thing, and they're starting to buy some cargoes from Australia, and that will displace some demand. But, Australia's crop is, 6.5 million tons versus our 20. Like, they can't. And historically, China has bought somewhere in the neighborhood of 4.5 million tons of canola from us. Well, clearly Australia can't ship that much canola there. And if they do, well, then there's a big void somewhere else. And the only ones that can fill it would be us. So there's a lot at play here in terms of just the trade aspect. And unfortunately, it's political. And that makes that really hard to say. Now, if this gets resolved and China does come back to the table and starts buying, and this is also assuming that China doesn't backdoor canola into the country through other, neighboring countries. I was just
going to bring this up. Like, all of a sudden the UAE is like, oh man, we love Canadian canola.
Well, or, what was it? A couple of weeks ago, there was an announcement that Vietnam had bought canola from Canada. I'm like, when was the last time we shipped canola to Vietnam? And guess who shares a border, right? So, but assuming that they don't buy in some big form or whatever, then, are we going to see the $15+ canola? Probably not, without some kind of a disaster somewhere anyways. But if China steps back in and buys again, well, then those numbers are on the table. And, at $15 canola on average yields, it will make sense. Canola is still one of the most consistently profitable crops in Western Canada. I mean, you can love it or hate it, I know. And depending on where you are, obviously in those dry years, it was really, really poor. But on average, I would say it's still one of the most consistently profitable crops that gets grown in Western Canada. But it does also seem like we've hit a limit in terms of acres and production. We've kind of capped out at somewhere between 21 to 23 million acres, and barring genetic changes that up those yield potentials, our production number is kind of capped out, I think. Our crush number keeps going up. It remains to be seen how many more crush plants will get going, but that's also a political one because so much of our canola oil, if the bulk of it, goes south of the border into the renewable fuel side. And now there's political stuff in the way on that one. And it looks like canola oil is going to be out of the crosshairs, but that's one stroke of a pen and that all changes again. So
Yeah.
it's a this is why I say I thought it was a simple question, but there's so many pieces involved.
Well, I've said this before, is that I think if you asked a lot of people in Western Canada, hey, who's our number one customer for canola, they would say, oh, it's China, but it's actually not. It's the U.S. because of that biofuel demand, right? And we're fighting a fight there too when it comes to that 50% of the RIN value that they're talking about from the budget reconciliation bill. So that there's a fight on, to make that equal as well. So canola definitely facing some challenges, but relatively speaking, the price, it's fallen off as of late, but the last 12 months performance is only down about 5%.
I was going to say, the thing that maybe for better or worse, but short-term memories when it comes to markets is the last time we were at these values was 6 or 7 months ago. It's not that long ago that we were down at 600, 580 canola, last winter for sure. And, it gets to be very doom and gloom and whatnot. And that's kind of where it feels like things are at again. But that's when I always think back to that saying, things are always the most bearish at the bottom. And now, farmers some of them are panicking and dumping canola because it's it's $13 or it's $12.50 or whatever the number is where they are. And I better pitch it before it gets even worse. And, historically, that's oftentimes when things tend to bottom. Also seasonally, this is the time when we typically put in a bottom as well.
Yeah.
Just kind of during or post harvest. So,
okay. So keeping with the China theme, what are you more optimistic about? Are you more optimistic about soybeans or canola? Because both have China challenges, and maybe the soybean export one out of the U.S. is maybe even a bit of a worst case scenario in terms of there's been no buying. But which one do you feel better about?
Oh boy, that's
I know. Isn't that fun? These are the questions I get from audiences all the time.
No, well, I mean, and they're good questions. Unfortunately, they're kind of both in the same arena here. And I said, you look at these political problems and they do kind of center around one country. Now, again, China is seemingly going out of their way to not buy U.S. beans. And so far, they've managed to get away with it because, there's been big crops coming out of South America, obviously, even though they're literally paying a premium on versus U.S. beans.
They are.
Yes. They're, I assume, trying to prove a point and probably working to an extent. But now think back to 2018, the last time this happened, and look at the direction that U.S. soybeans ended up going. And it would not surprise me one bit that all of a sudden U.S. soybeans are going to end down in Argentina or in Brazil like they did in 2018, because South America shipped out so much that all of a sudden it's their crushers were hold on, we need this too.
Yeah.
And, and so we ended up, or not we, the U.S. ended up shipping soybeans down into Argentina. And I mean, I don't know if it was ever actually proven or not. There was also talk that there was U.S. cargoes of soybeans that went to a port in Brazil for a night and then on their way to China kind of thing too, because where did the boat come from? Right?
Just small sleepover.
Yeah, exactly. It's all semantics, right? But that's the problem with the political side. How do you predict when someone's going to agree to something, when someone's going to back down and say, okay, this is enough, we need this stuff, that sort of thing. And that's what makes this part so challenging, is trying to factor that in. It's not just a normal S&D anymore. Now it's what's the political whim of the day.
That's Brian Voth of IntelliFARM. When we come back, we're going to hear from Mark Alberts from InVigor Hybrid Canola. You're listening to RealAg on the Weekend.
AgriTrade Equipment Expo, November 5th to 7th at Westerner Park in Red Deer. Discover the latest ag innovations, equipment, and technology. Get your tickets now at agra-trade.com.
If you're serious about agriculture, RealAg's got you covered.
For over 10 years, we've listened to and shared what producers have to say about everything from policy to agronomy from coast to coast.
Keep up with the latest in Canadian agriculture at RealAgriculture.com through daily newsletters, and check out our YouTube channel.
Thanks for joining us in the RealAg community as we continue to cover and serve North American agriculture.
Hi, I'm Bernard Tobin, host of the Soybean School on RealAgriculture.com. Throughout the year, on the Soybean School, we'll bring you timely agronomic video content from planting to harvest, from the latest agronomic research to the latest in production technology. Check out our massive video library on YouTube, RealAgriculture.com, or download the audio podcast versions wherever you get your podcasts. The Soybean School is brought to you by Mazik Seeds and Lalamon Plant Care.
If you're involved in the agriculture industry, it's important to stay informed on all the latest issues affecting your business. At RealAgriculture.com, we offer fast, reliable news, information, and insights to help you keep on top of all of the latest in Canadian agriculture. Visit RealAgriculture.com and sign up for our free daily newsletter covering everything from news, agronomy, animal agriculture, and much more. Visit RealAgriculture.com/subscribe today.
You know, as I hear that conversation with Brian Voth of IntelliFARM, I just, again, it's really complex, and this is a difficult issue for Prime Minister Carney to steer through. He's got it. Obviously, he wants to open up more trade with China, but he's also, at the same time, as we saw in Washington, D.C. this week, he is trying to have calmer trade waters with Canada's largest trading partner, the United States. Canada exports per year $600 billion worth of goods to the U.S. China and Europe together is 65. So one market is 600. China and Europe are 65 in total. So he's got his priorities in line, but he knows that if he lifts those EV tariffs, it doesn't necessarily mean that the canola tariffs are going to go away. And it may potentially also create bigger issues with Canada's largest trading partner, the United States. So, yeah, not an easy one to steer through at all. And at the end of the day, even with these tariffs in place, it has definitely impacted the canola prices. We've seen a pretty substantial drop since the spring. But like I mentioned to Brian, if you look in the last year, canola's down about 5% from where it was a year ago on that November 25 futures price. So having said all that, I still think I'm not necessarily a big believer we're going to see this massive drop in canola acres. I think at the end of the day, even with some of the challenges on trade that canola has, we're still going to, if there is a drop, it's pretty small. And here's the other part of it. Remember back to pre-planting, pre-seeding of in 25 here. That's where China first put the tariff on oil and meal. And people were like, "Oh my goodness!" We saw a big drop on that Monday morning following the announcement on the Friday, and people were saying, "Well, should farmers plant canola?" And good thing they did, because the price really surged in the next 2 weeks after that, and that's why we're down so substantially here in the last 3 months, because we did move higher. So kind of a risky game to do I predict this is going to happen, therefore I'm going to make a substantial change in my rotation. I don't know. My history on that has always been you're always in the wrong. But I think we may see a slight drop, but not maybe. And who knows? There's a lot of time between now and 26 planting. Okay, let's get to a product spotlight. The following is a paid-for product spotlight by BSF Canada and InVigor Hybrid Canola. We're joined right now by Mark Alberts, who's the Senior Brand Manager for InVigor. Hey, Mark, how are we doing?
Doing really good, Shaun. Thanks a lot for having me today. Really excited to be here and chat.
Yeah, it's always great to chat with you. So we got some exciting stuff here with the InVigor book and buy offer. So growers are always looking for ways to get ahead. Walk us through this InVigor book and buy.
Yeah, absolutely. Well, we all know growers, retails, that planning ahead really is where the next season and success does start, whether that's seed, other input decisions, equipment on the farm. We all know that living in the farm community. So the InVigor book and buy offers really that opportunity for farmers and retails that are looking to plan ahead, make their hybrid canola decisions for next year, and getting rewarded for doing so by November 14th, 2025. So we want to enable everyone to have those good, solid crop planning discussions, and really encourage folks to do so with the InVigor lineup and save big next year.
So I guess why now? Why did you create this program?
Yeah, absolutely. planning is becoming more important than ever. We know with the commodity markets, everything that the pressures on farm, planning is really important. And it's also a very competitive market out there in the canola seed business. So we also believe we have one of the strongest InVigor hybrid lineups ever, which whether you're in Alberta, Saskatchewan, Manitoba, you're going to find a hybrid that's going to fit your farm. And really with the InVigor book and buy offer a value point as well that's going to suit most any farmers. So it's a competitive market. We understand the importance of planning early, and we want to put some dollars in place there for farmers doing so.
Which InVigor hybrids are eligible?
Yeah, so the eligible InVigor hybrids are going to vary by province. So growers, keep in mind where you're located, and please search out InVigorBookandBuy.ca for which InVigor hybrids in the lineup are going to be right for you. The eligible hybrids have all been selected based on their agronomic fit. As I mentioned before, the lineup is as strong as it's ever been. So whether you're looking for an earlier maturing hybrid like InVigor L330 PC or a later maturing big yielder like the new InVigor L355 PC, we want to put those options in front of growers. So not every hybrid on the lineup is going to be eligible. So we do encourage growers to talk to their local retail, have that discussion about what's going to fit for you. And hey, even if it's 1, 2, or even 3 hybrids from the InVigor lineup, multiple hybrids is always a great thing to balance risk and the high performance of InVigor across the farm.
Okay, so let's get into the mechanics of this a little bit. So I'm obviously there's an incentive here to book early. Just to talk about from the growers. Obviously, you're getting a high end hybrid, but what are some of the other things that go with this program?
For sure, Shaun. It's a really simple offer. So number one, again, growers visit InVigorBookandBuy.ca and figure out which eligible hybrids in the lineup are going to fit for you. Number two, visit your retail by November 14th, 2025 and book your intentions. Number three, go back to that same retail and purchase your InVigor hybrids in 2026 when you're ready to go, and you'll be eligible for a $30 per bag rebate that would get paid back to you in the fall of 2026. So it's very simple. You just need to talk to your local retail. They're the folks that are going to help answer all the key questions, help you understand which hybrids can fit for you. So really simply visit them by November 14th. I actually encourage before November 14th. And have a chat about your crop plans for 2026.
Hey, great stuff. So for growers who haven't booked yet but are thinking about it, there's still time. Great opportunity.
There's lots of time. We're into early October, so I'll just a quick plug for InVigorResults.ca. If you're looking for some of those local proof points closest to your farm of which hybrids in the InVigor lineup might have a good fit, have a look at that. If it's an eligible one and is performing well in your area, based on real-time replicated data that we're pulling off right now, there's lots of ways that you can kind of validate some of that and learn more.
Yeah, that InVigorResults.ca, those new results going in there all the time. And there's a lot of info there across the hybrid lineup, not just InVigor, but competitors. And you can really look at how things did in your area. Some awesome data there for sure. Also, we also heard InVigorBookandBuy.ca. So, hey, Mark, thanks so much for joining us here today. Really appreciate it.
Thanks, Shaun.
I was a real jet setter this week. I was able to talk to a group of accountants and farm management consultants with MNP in Calgary. And then I flew out to Elora, Ontario to talk to the Canadian Association of Farm Advisors, CAFA. Great group. Elora, beautiful area in the country. I highly encourage you to check that out. And this time of the year, fall, it's like living in a postcard. Like beautiful color changes happening on the trees out there. So was able to connect with the audience, always a lot of fun, and talk about all the things we talk about here on the show, like politics and policy and farm profitability, farm management, and what are some of the issues that are happening in the trade arena. It really was a good time. And one of the things that always comes up is Canada's ability to diversify trade. Right. How do we do that? We're talking about it a lot, but executing on it is difficult. When we come back, we're going to talk to JP Gervais. He is Chief Economist with Farm Credit Canada. He's got some thoughts when it comes to food and beverage in Canada.
The future of Canadian food is strong, and FCC is ready to help the next generation of innovators like you with financing tailored to your needs and resources to help you keep growing. To get started, visit fcc.ca/youngfarmer.
RealAg Radio is Canada's only daily radio show focused on agriculture. Get expert advice on Agronomic Monday. Tuesdays and Wednesdays will cover a broad range of issues. Thursday we'll hear from farmers across the country on the Farmer Rapid Fire. And we'll wrap things up Fridays with the RealAg Issues panel with Kelvin Hefner and Lindsay Smith. Join us Monday through Friday at 4:30 Eastern. And don't forget about the replay at 7 in the morning on Rural Radio 147, Sirius XM.
Get all the information you need to keep your pulse crop healthy and profitable with the Pulse School on RealAgriculture.com. The Pulse School is a free YouTube video series covering agronomy, research, and more across a host of different pulse crops. It's also available as an audio podcast wherever you download or stream your favorite podcast. Check us out on YouTube or visit RealAgriculture.com. The Pulse School, brought to you by BSF Canada.
Farm Credit Canada is out with a new report talking about the $12 billion trade shift, Canada's opportunity to diversify food exports beyond just the United States. Here to talk about it is Farm Credit Canada's chief economist. It is JP Gervais. JP, it is great to chat with you.
Always good to see you, Shaun. Thanks for the invite.
Okay, man, so lay the goods on us here. I guess, what are the numbers as we sit here today? How important is the U.S. market to our food and beverage exports?
76%. So that's the number, right? 76% goes to the U.S. Not too long ago, about 5 years ago, we were 67% of all our food exports and beverage exports would go to the U.S., right? So over time, over the span of 5 years, we've been becoming even more reliant on the U.S. And that's not a bad thing. I want to put that out. It's not a bad thing. Largest economy in the world, located next door. We got all sorts of, trade concerns and the relationship and all that sort of stuff. We are going to need the U.S. This is not about getting rid of the U.S. This is just about like risk management, growing, and how can we think of beyond the U.S. That's really the key here. The U.S., 76% of our food exports go to the U.S. On the ag side, if you look at primary commodities, it's 31%. So the reason why we focus more on food is, from an ag standpoint, if you think of grains and oilseeds, or the crops as well, we're very well diversified. We are selling a lot to the world, whereas on the food side, we probably have opportunities here.
So you talk in the report about maybe getting to more of like a 50% of the trade being in the U.S. There's three suggested approaches that you bring up. One, strengthening interprovincial trade. Two, leveraging existing free trade agreements. And three, establishing new international trading partnerships. All three of those make sense. How do we make them happen, JP?
Super great. So let's just unpack all of this, right? So I think at the end of the day, though, the underlying, what's the strategy, what are the tactics, pretty much the same. But from an interprovincial standpoint, right? So if we want to say there's a lot of north-south trade between Canada and the U.S., right? As opposed to east-west within the country, for good reasons. I mean, we're a big, big country, so it's expensive to ship from one coast to the other coast. We all get that, right? And I'm not expecting that tomorrow we're going to ship from BC or high volumes of BC products going to Quebec and the Maritimes, simply because from an economic standpoint, that's not necessarily the most competitive outcome. And we would have to think really outside the box with making this happen. But if you unpack this, you pick a target, you can argue, is it 50%? Should it be 60%? Should it be, we pick 50 just simply because it makes sense to have at the aggregate level, because this is another thing. It's not a one size fits all food sectors equally able to get to a diversification target. So we're going to ask in the report, we ask more of some sectors that we think is easier to diversify, right? And I'll park that in a second. So that's one thing. But at the aggregate level, we say, all right, 12 billion is getting from 76% going to the US to 50. Mm-hmm. And what can we do to get more or displace? So what we're not going to be selling to the U.S., some of it could be sold interprovincially, right? So you look at what is the U.S. shipping over here and how can we get that down as well? So pick a number, and say about 2.6 billion of the 12 billion that goes to the US could actually be across provinces. So how do you do that? I'm getting to your answer. Like, I just want to walk people through like kind of the 12 billion, 76% of 50 out of the 12 billion, 2.6 more interprovincial trade. So how do we do that? Well, a number of different ways. And it's, the federal government came up with Treasury Board came out with a report highlighting, I believe it was 500 initiative to cut red tape, modernizing regulations across provinces, whether it's labor standards, transportation standards. You need to lower the costs of doing business in Canada, period. If you do that, then you get all of a sudden a little bit more momentum towards Quebec, Ontario together, a little bit momentum across the prairies, a little bit momentum Alberta and BC. And so this is what I'm talking about, that you don't have to travel that much of a distance because that's costs, obviously, and costs are driving a lot of the underlying market outcomes that have currently, where there's a lot of U.S. products coming in, and we export a lot of the same U.S. products.
Yeah.
So we know retailers want more Canadian products. That's one thing that the trade war or trade disputes with the U.S. has done. So how do we make sure they do that? They can get that, and that's lower costs, lower the standards or harmonize standards, lower modernized regulations, cut red tape, invest in infrastructure for transportation. It's going to get us to export markets. But before that, I think we can actually just do a bit more interprovincial.
If I told you I was skeptical of the interprovincial trade, what do you think?
I wouldn't be surprised. So you have every reason to be skeptical because it hasn't happened. It's not something new, right?
Yeah.
If it was effective from a market standpoint, it would already be happening, right? I mean, like, businesses they're smart people. Markets are really great at allocating resources where it's the most efficient. So, but the truth is we are doing a lot of two-way trade. So where are the spots where, you don't want to expend too much, the cost of shipping products? And what are the spots where you can actually say, US, stay where you are. We don't need you. We're going to actually be able to substitute for a Canadian product that is competitive, of high quality. And I think something needs to change. Otherwise, every reason to be skeptical. We're going to be here 5 years from now, and we're going to look at 80% of our exports go into the US. And we're going to face maybe tariffs even more. I don't know. And so, I'm absolutely 100% every reason to be skeptical, but there is potential to change. That's the one thing. And this is why, what's the target? Well, 50 is arbitrary. And then even how we went about saying out of the 12 billion, how much is interprovincial is arbitrary. There's lots of math, lots of logic behind this, but at the end of the day, pick a number and try to work towards that is kind of the message of the report.
Point number 2 is leveraging existing free trade agreements. And I remember an interview that I did with the late Jim Carr going back, this is a while ago now. And his big message at the time was, listen, we've got a bunch of trade agreements in place already. We talk a lot about market access. We actually have market access in a lot of countries, and we're not utilizing those agreements. We need to really open ourselves up and make sure we have the information. How do we almost have like a concierge service to ensure that companies that are interested in exporting, they're fully aware of the market opportunities that are out there for some of the products and goods that they are producing. So it's not like there needs to be a new trade deal. Let's leverage the agreements that we already have with some of these countries around the world. And so I'll never forget that. Hey, we've got more coming up here with JP Gervais. He's the chief economist at Farm Credit Canada, and we'll have more of our discussion when we come back. You're listening to Real Ag on the Weekend.
Black Earth offers a full suite of humic solutions, from high-purity granules to powder, liquid, and soluble formulations, all powered by pure Humulite. Trusted by growers worldwide from one of the world's rarest Humulite reserves. Grow stronger with the power of Black Earth Humulite. Learn more from mine to market by visiting blackearth.com.
Lindsay Smith, host of The Agronomist, and I want to thank you for tuning in for over 200 episodes of our beloved little program. Join me Monday nights, 8 p.m. Eastern on YouTube for our live and interactive agronomy Q&A. Each week, our guest panel will handle some of your toughest agronomic questions live, streaming on YouTube, Facebook, X, and RealAgriculture.com. Tune in Monday nights or go to RealAgriculture.com/agronomist and sign up for our email notifications and don't miss an episode.
The Canola School on RealAgriculture.com is a video series that showcases the latest in canola research and production agronomy. Learn from some of the best at your own pace through quick and timely producer-focused videos available on our YouTube channel. The Canola School on RealAgriculture.com is the quickest way to keep up to date on all the latest in canola production. Boost your canola IQ with the Canola School, brought to you by BASF, and visit canolaschool.com.
Here on RealAg on the Weekend, we are talking to JP Gervais, Chief Economist with Farm Credit Canada, about Canada's opportunity from FCC standpoint to diversify the trade for food and beverages produced in Canada. I do want to mention that you can check out realagriculture.com/subscribe to find all of our great emails that are distributed on a daily basis for free to you, the Real Agriculture audience, keeping you up to date on all the things that are happening in the world of agriculture. Hey, let's get back to my conversation with JP Gervais of Farm Credit Canada. If I'm a small I'm fabrication, or I'm making something, I got some sort of product, and I've been selling it in North Dakota for the most part, or South Dakota. That's been my market. But if somebody tells me or helps me, assists me, I probably haven't even thought about the Spanish market, whether there's an opportunity or not. How do we make this happen? Because this seems to be, there seems to be some opportunity in this one.
Yeah, we don't market ourselves really well. We probably need some coaching, 100%. So your concierge type of service, that's something that absolutely, that would make a big difference in making sure that we go with the Canadian businesses in the foreign markets where we think there's potential. We got 15 trade agreements in Canada, 51 countries, 2/3 of the GDP in the world. So that's significant, right? I mean, and most of these agreements are 90% plus tariff-free access, and in a lot of cases, 95% and more. So at the end of the day, there's an opportunity. It helps getting your product in a market. So what we did is, you take out the interprovincial trade we can do, you're left with, 9.5 billion, let's say, or a little less than that. And you say, all right, what are the markets that are growing? What are the markets that are sizable? Because it's one thing to say there's growth, but if it's from a small base, it's really hard to penetrate the market, right? So it helps that there's a large base, and it helps that the large base is growing, because you can capture that growth as opposed to disrupting an existing relationship that, has been established for a number of years. Because you need a buyer somewhere to take a chance on you, kind of like, whether it's a trader or whether it's the business that sells direct to consumer. Bottom line is you have to kind of rock the boat a bit. And so it helps that there's lots of growth if it's a large base, and trade agreements, because you have some predictability in terms of what you can expect in that market. So what are those markets, right? European markets, I mean, you name a few. Obviously, right, this, and then we've been saying this, like, why are we not? Like, it's one thing to blame Europeans, to say, wow, they're not living in the spirit of the trade agreement, but at the same time, like, what can we control? How we look inward and say, well, that's an alliance that we want to expand on and promote and enlarge. So there are opportunities there, depending on the sectors. Again, right? Not one size fits all, not all sectors. Mm-hmm. And then, Asian markets, we got more and more. There's one with Indonesia. Well, Indonesia is wheat and soybeans for the most part, but who knows? I mean, on the food side, that's what I was talking about, small base, but there's growth. So, so those are the things that, we need to help Canadian businesses kind of just take that next step.
Yeah. And one of the challenges is this, I think a lot of times in trade, people forget that, they're like, well, Canada wants to do more business with X country. And we forget that, like, for the most part, China may be a little bit of an anomaly here. Like, the Chinese government makes those purchases happen. In Canada, it's individual entities that are doing the business transactions. It's not the Canadian government actually saying, we're going to make the decision. We're going to export more food and beverage exports to country XYZ away from the United States. That's not how it works. And so that makes this a little bit of a more difficult change to happen if it's going to happen.
Yeah, no, exactly. It's like you look at aggregate statistics, and it's easy to forget that behind all the aggregate statistics, you have businesses that are investing, they're deploying their own capital and establishing those relationships. There are big, huge fixed costs to sell in foreign markets or develop new markets. And so it's really, how do you make sure that you can go with some businesses? And at the end of the day, to develop new partnerships, you also have to be thinking about, like, from a competitiveness standpoint, how do we make sure that we're the most efficient or as efficient as possible when it comes to logistics, transportation? It's a big country. So, whether it's to process, add value to primary products that come from the prairies to the coast, maybe transform the prairies, ship to the coast, whatever that organization of the market looks like, you have to invest in making this more cost efficient. Otherwise, it's just not going to happen.
Yeah, fascinating stuff. I encourage everybody to check out the report. You can find it at fcc-fac.ca. We're also going to have a link in the story here at RealAgriculture.com. JP, thanks for joining us.
Always a pleasure. Thanks, Shaun.
Probably a good time in the show to, before we wrap up here, to mention, wow, how about those Toronto Blue Jays, everybody? We've got the ALCS starting here this weekend on Sunday. And I'll tell you what, when I was flying out to Toronto, Air Canada now has live TV, which, oh my goodness, for somebody that flies a lot and going from one side of the country to the other, to have live TV is awesome, especially when the Toronto Blue Jays are playing the New York Yankees in Game 4, an elimination game. Watched 2/3 of the game on the plane, which was really a lot of fun. Everyone's cheering, and the guy sitting beside me, he's like, first baseball game I've watched all year. And he was right into it. He was loving it. And look forward to seeing the Blue Jays in the ALCS. And boy, it just takes you all the way back to whether it's 15 or 92, 93. When this country, when the Blue Jays are hot and they're playing well, Canada loves baseball. It really picks it up and runs with it. And that Rogers Center is going to be rocking. It is going to be full throttle like a jet engine, a jet plane, landing in the middle, like right on second base, because people are ready to rock. They got a whole country behind them, 40 million people. It makes actually, from a TV market perspective, it makes Canada one of the biggest baseball markets in North America. And you know what? We got a team to cheer for. And what's interesting is how they're built. And the Brewers have been very good, and the Brewers and the Jays built very similar in terms of they got like 3 or 4 guys in and out of the lineup that really can do anything. They are built, they're so versatile and flexible, and it is so nice to have those guys. They're just not one-dimensional, and some of them have really, like, you look at Ernie Clement, Miles Straw as an example, Dalton Varsho, like those guys can play just any position on the field, which gives John Schneider, the manager, a lot of different options. And it's nice. When you think about your farm or your ranch, it's always nice to have those Swiss Army knife kind of team members where they're able to do a lot of different things given the situation. That's kind of the team, the roster that Blue Jays management has definitely put together. Boy, we've moved quickly from everybody talking about how this management group doesn't know what the heck they're doing and what are they up to, and they struck out on Ohtani and they didn't get him, and the world is over. And now look at the Toronto Blue Jays. It is going to be a wonderful next 10 days watching the ALCS, and hopefully they go a little bit deeper. If you have any feedback, send me an email, shaney@realagriculture.com, or of course you can call or text 855-776-6147. Thanks for tuning in to Real Ag on the Weekend, and we'll chat again next week. Thanks a lot, everybody.